Hello and welcome to the Daniel Wynn podcast. Today we're going to talk about why real estate investors like working with private lenders. And I have a lot of experience and I want to share that with you. So let's talk about why real estate investors like private money lenders. The first thing we're going to talk about is what are the big problems when you're dealing with a bank or traditional lenders? The number one thing is that banks are going to take a little bit more time. I see when people are paying us off, banks sometimes take 30 days, 45 days, 60 days to close a loan. And private money lenders can do that a lot quicker. So that's the number one reason is speed, right? And speed is the name of the game. Sometimes real estate investors need to close quickly because they're on a timeline. They made a cash offer, they made an offer to close in 2 weeks to beat out some other bid, and this is why they need to move quicker. And banks are not going to be your best choice when you have to move so quickly. The second reason is that credit requirements. Banks are going to have tougher credit requirements over private money lenders. Typically, a bank needs a 650 credit score. Private money lenders can take any score. Now, all private money lenders get to make their own rules. Some are going to still want high credit. Some are going to be flexible. Our company likes doing all credit, and we just offset the risk by going with a lower loan to value. Let me give you an example. We have a loan that we're going to close for like $100,000, and the borrower has a 517 credit score. Now, you'd say, Dan, why the hell would you want to do a loan like that? Simple. We're offsetting the risk by doing a lower loan to value. The property is not a complete gut. The borrower has experience, and the property is in good condition. The as-is value is approximately $200,000. We're going to hold a little bit of money in escrow while they do the work, and we're going to give them a chance to succeed. So this is a reason why we, as private money lenders, can get some of the business that banks don't do and help us make a profitable private lending business. Okay. The third reason, besides credit and besides the time frame, is that traditional lenders don't want to do properties with missing kitchens, bathrooms, drywall missing down to the studs, stairs missing. A traditional rehab lender, private money lender, will be open to these. Now, not all lenders will accept those types of transactions. Our company likes doing properties like these with experienced investors as long as we can protect ourselves. And how do we protect ourselves? Like I spoke about a minute ago, we protect ourselves by holding the money in escrow. If there's a $100,000 escrow budget for rehab, we may only disperse $30,000 or $40,000 at the initial closing, holding that other money for the rehabber to complete the work, let us inspect it, collect lien waivers, and then they can make the next request. Then they can start the next leg of their rehab project, and the same process is done over and over until all the money is dispersed to the borrower. So these are three reasons why um, banks are not always the best people to apply for rehab loans and investor loans. Now let's talk about the advantages of using private money lenders. Private money lenders can close quickly. We tell people that we can close in 7 to 14 days. And the reason we can do that, as I'll explain shortly here, is because we're prepared to do it. It's our only business. We're focused on this. And when we already have a relationship with an investor, it makes it even easier because now we know what they're like, they know what we're like, we know how to work together. So sometimes our company is able to close loans in a few days. We get borrowers sometimes that are behind on their taxes and they have to pay the taxes within a week. We've been able to close loans in under 7 days. So this is one of the great advantages for using private money lenders. And maybe you'll need that one day and you won't have time to go to a bank. The other reason is because we can build custom loan packages. Let me give you an example. So most rehab loans and private money loans are 1 and 2 year loans, right? 12 months interest only, 14 months. And sometimes people are getting a good deal and they want 100% financing. Well, we don't do 100% financing, even if they're purchasing the property undervalued. we want a significant down payment. So maybe they have another property that's free and clear or with a low balance. We could, if we like that property and it checks out, we could accept that property as their down payment, cross-collateralize the two properties, and make the loan, the purchase and the rehab loan, right? So that gives them 100% financing without having to come with money out of their pocket. The other thing is sometimes property owners have multiple properties that they want to work on at the same time. So we cross-collateralize properties. And sometimes we've cross-collateralized 2 and 3 properties. And the biggest one we ever did had 10 properties that we cross-collateralized. So those are custom packages that you can get with a private money lender that you cannot get with traditional lenders and banks. Lastly, private money lenders build relationships with borrowers, and those relationships help each party to grow. It helps the private money lender to keep lending his money out, and it helps the borrower and the real estate investor get money quickly and work on multiple projects at once. We have borrowers that have been with us for years doing 1 deal, 2 deals, 3 deals a year, and it's a great testament to why we are in business and the great service that we offer in the marketplace. Next, let's talk about who uses private money and why. Real estate investors are the primary users of private money lender because they have non-owner occupied properties. Most private money lenders will not lend on owner occupied properties because of the different rules that exist out there. Private money lenders like focusing on non-owner occupied. So typically, who uses private money lenders is real estate investors. Now you can get the novice, person doing their first deal, and you can get somebody with a lot of properties under their belt and everything in between. We also get these types of deals regularly, right? The novice, and those are harder to do, right? They have to come in with a significant down payment to make sure that we control our risk. But we've taken a chance on many first timers, and it's worked out really well because of our underwriting guidelines. People that have experience and have multiple properties have been able to get loans, sometimes 2 or 3 loans at one time with us. So real estate fix and flippers are the first audience that we normally see. Next, we see a lot of real estate investors that need cash out. There are a lot of real estate investors that own a lot of free and clear properties. Some of them have great credit and some of them not so great, and everything in between. We often get people that cannot go to banks because of that 650 credit score requirement that own multiple properties, and we give them out the cash they need to go buy more properties or cash to fix up properties that they already own, right? So it's a great relationship. It closes quickly. They fix up the property and sell it, pay us off. They fix up the property, fix up their credit, and then refinance it into a longer term loan. The third customer that we see in our business is the long-term rental loans. We close loans we don't keep these in-house, but we have correspondent relationships, and we're able to do DSCR loans and long-term rental loans at competitive rates and competitive loan to values. Private money lenders like to work with real estate investors with all types of credit because they can reduce their risk and they can customize the loans for the borrowers. Now let's talk about how to qualify for a private money loan and what types of loans are available. As I said before, typical private money loans are 1 and 2 year terms. Interest rates are 10 to 12%, and there are points in closing costs with these types of loans. Most private money lenders want to lend residential only, 1 to 4 units, condominiums, townhomes. They like these non-owner occupied residential properties. So how do you qualify for one of these loans? Simple. Have a lot of equity, right? If you own a free and clear property and the property is in a decent area, you are most likely to qualify with many private money lenders. Doesn't matter what your credit is. If you got a good plan to sell the property or to somehow get out of it, bring on a co-borrower, whatever, this is where we get really creative. We have people that borrow money, they fix up the property, they don't have the credit to get a long-term loan, and they put a friend or a relative on the They put the friend or the relative onto their LLC or corporation or add them to title, and we're able to get them loans sometimes uh, by doing it in this manner. So there's so many different ways to get financing with private money lenders and private money brokers when they have the experience like we have. So we have custom solutions, and the way that you qualify is if you don't have a lot of equity, you're going to have at least 25% down payment. Most private money lenders want skin in the game, or like I said earlier, or another piece of property as collateral. So how do you qualify? You contact your private money lenders from wherever you can find them, the internet or from referrals. Give them a call, have a good package together, have a good plan, a strategy, be able to summarize your loan request, be able to do it on one piece of paper, right? On one page, 3, 4, 5, 6, 7, 8 items, what you're going to do with the money, how you're going to pay back the private money lender, assure them of your confidence in yourself. Don't overestimate the value of the property. I think that's the most common flaw that I see with experienced and beginner real estate investors. They overestimate what they're going to sell the property for, and they underestimate what they're going to do the repairs for. Today, we went over what private money lenders do, how they can help you with your business, what type of programs that they offer, what kind of terms, and how you can qualify for a private money loan. If you're looking for a private money loan, give us a call. We'd love to do business with you. If you're looking for a joint venture partner, we're open to those types of relationships always. And we'll see you at the next podcast.